go to Dan Deming. I was looking at the stock. He's a managing director at KKM Financial. Welcome back, Dan. Okay, so Apple, walk me through what you think here as we've gotten some stability, but certainly not a big bounce on Apple.
No, we haven't to this point, Oliver. We've had some fits and starts, but nothing that's been able to take hold from the selling pressure that it's realized really for the last month and a half or so, particularly as you guys just discussed, the rise in interest rates being a major headwind for a lot of these tech names, where they're discounting of their future value if that continues to be a trend in the market. So, you know, Apple's in a unique situation that, yeah, they are still lumped into that growth category for the most part, but I think they've diversified to some degree over the last 10 plus years. And certainly if they're entering the auto market, that's, as you guys mentioned, that's something that's a little outside of, I guess, well, it's still tech, but it's certainly expanding their horizon. So, you know, I think Apple is going to be a little bit challenged here over the short term, particularly if we see rates continuing to creep higher. But at the same time, I think there's some opportunities here, Oliver, to either get long the stock if it was to give up some further ground, or possibly get short the stock if we do see a reaction to maybe a little resetting of expectations. So I'm kind of looking to collect some premium with this trade example on Apple, Oliver. So I'm looking at an iron condor, and basically what it is selling a call spread and selling a put spread to collect some premium.
Okay. All right, interesting. All right, so you don't want to really have to pick sides here, it seems like,
Right.
Dan.
That's correct.
Okay.
Yeah, that's correct, Oliver. I mean, I think that, you know, if you see Apple bounce from here, and if we push up into the 130 range, it's, you know, I don't mind getting short, I think, at that level, and I'm not sure if it's going to make it back up there by the April expiration. So my trade example is in April, and what I'm looking at is selling the 110-100 put spread and selling the 130-140 call spread. Defines your risk. Again, it limits your capital outlay by putting on spreads as opposed to just selling the options outright. And also, it allows you to collect about $2.30 over the next month, which is just a little under 2% versus the stock, with the opportunity to either get long at basically 107.70,
okay,
or get short at 132.30. So, you know, so you can either get short on the top side if you want to allow yourself to get assigned either way, or you can get long, you know, just below 110, and that's just below the 200-day moving average. And again, that's a level I think that's much more attractive for Apple over the next month if we do see some volatility here and you have the opportunity to maybe realize putting the position on.
Okay. All right, so Apple not picking a side quite yet, looking to capitalize on some of the vol that has crept in to the stock. Dan, makes sense to me. Thanks for the trade. Appreciate it, Mr. Deming.
You're welcome, Oliver.
Okay, Dan's managing director at KKM Financial. Apple Car. Okay, they got a lot going already. Car seems pretty reasonable, but does the stock depend on it?